Everybody is talking about artificial intelligence. AI can write emails. AI can answer customer questions. AI can schedule appointments. AI can create marketing content. AI can organize documents. AI can help small businesses move faster. But here is the real question for tax preparation offices: is AI too risky? Because a tax office is not just any small business. A tax preparation office handles Social Security numbers, W-2s, 1099s, IRS notices, bank records, payroll records, dependent information, business deductions, income statements, addresses, employer information, and deeply personal financial data. That means the conversation around AI must be different. For a cleaning company, AI might help follow up with leads. For a restaurant, AI might help respond to catering requests. For a retail store, AI might help create product descriptions. But for a tax preparation office, one bad AI workflow can create real damage. A data leak can destroy trust. A wrong tax answer can create penalties. A careless message can confuse a client. A rushed automation can expose sensitive information. So today, we are going to answer the question directly. Is AI too risky for a small tax preparation office? And the answer may surprise you. AI is risky when it is unmanaged. AI is risky when it is unsecured. AI is risky when staff use it without rules. AI is risky when nobody checks the output. But AI is not automatically too risky. When used the right way, AI can help a tax office reduce chaos, save time, improve client communication, and protect the tax professional from being buried under repetitive administrative work. The goal is not to replace tax professionals. The goal is to help tax professionals work faster, smarter, and safer. Here is where many small business owners get AI wrong. They hear about AI and immediately think, let's use it for everything. That is a dangerous mindset. A tax preparation office should never treat AI like a magic employee that can do whatever it wants. AI should not be trusted blindly. AI should not be given private client information without security controls. AI should not be used to make final tax decisions without professional review. AI should not be allowed to answer sensitive client questions without a human checking the response. The biggest risk is not AI itself. The biggest risk is uncontrolled AI. That means employees copying and pasting client data into random online tools. That means using free AI platforms for sensitive financial questions. That means sending AI-generated answers to clients without verifying accuracy. That means having no written AI policy. That means nobody knows what is allowed, what is prohibited, and what requires approval. That is not innovation. That is digital chaos. A smart tax office does not need to fear AI. A smart tax office needs to control AI. A tax preparation office is built on trust. Clients do not walk into your office just because they need a form completed. They come because they trust you with their financial life. They trust you with their family information. They trust you with their income. They trust you with their business deductions. They trust you to help them stay compliant. They trust you to protect their privacy. That trust is the real asset of a tax office. And trust can be lost quickly. Imagine a client finds out their private tax documents were copied into an AI tool that your office did not properly vet. Imagine an AI-generated message gives a client the wrong explanation about deductions. Imagine a seasonal employee uses AI to answer a tax question and sends it without review. Imagine a client receives a message that sounds official but contains inaccurate information. That is why AI must be handled carefully. Tax offices are not just dealing with convenience. They are dealing with confidentiality, compliance, accuracy, and professional responsibility. This does not mean tax offices should avoid AI forever. It means tax offices must implement AI with discipline. Let's talk about the wrong way to use AI in a tax preparation office. Do not start by asking AI to prepare tax returns. Do not start by uploading complete client tax files into public AI tools. Do not start by asking AI for final tax advice. Do not start by letting AI respond directly to clients about deductions, credits, IRS notices, filing status, or audits. Do not start by allowing every employee to use whatever AI tool they find online. That is how risk enters the business. AI can sound confident even when it is wrong. AI can misunderstand context. AI can leave out important details. AI can generate outdated or incomplete information. AI can create an answer that sounds professional but is not suitable for that client situation. And in tax preparation, sounding right is not enough. The answer must be accurate. The answer must be reviewed. The answer must fit the client's actual facts. That is why AI should not be the final authority inside a tax office. AI can assist. AI can draft. AI can organize. AI can summarize. AI can remind. AI can help manage workflow. But the tax professional must approve final decisions. The safest way for a tax preparation office to use AI is to begin with low-risk administrative workflows. That means using AI to support the office, not replace the tax professional. Start with the tasks that waste time but do not require tax judgment. For example, appointment reminders, client follow-up messages, document checklist templates, review request emails, missed call responses, new client intake instructions, general educational content, office workflow summaries, internal task lists, social media posts, email newsletter drafts, deadline reminders. These are areas where AI can be extremely helpful. During tax season, many offices are overwhelmed. Phones are ringing. Clients are missing documents. Appointments are being rescheduled. Staff members are chasing W-2s, 1099s, bank statements, receipts, and business records. AI can help reduce that administrative pressure. It can help your office send faster reminders. It can help clients understand what to bring. It can help staff stay organized. It can help reduce repeat questions. It can help the office look more professional. And most importantly, it can do this without making final tax decisions. That is the smart starting point. Let's make this practical. The first AI workflow a tax office can use is client reminders. Every tax office knows the pain of missing documents. A client schedules an appointment but forgets their W-2. Another client forgets their 1099. A business owner forgets receipts. A self-employed client forgets mileage records. A client with dependents forgets childcare statements. Now your staff has to call, email, follow up, and wait. This delays the return. It creates frustration. It slows down the office. AI can help by drafting automated reminder messages before the appointment. For example, your tax appointment is coming up. Please bring your W-2s, 1099s, photo ID, social security cards, dependent information, business income records, receipts, and any IRS letters you received. That message can be customized for different client types. New client, returning client, self-employed client, small business owner, rental property owner, gig worker, retiree. AI can help create the message. Your office reviews and approves it. Then your system sends it automatically. That is a safe and valuable AI workflow. No tax advice. No sensitive data exposure. Just better communication. The second AI workflow is document checklist support. One of the biggest problems tax offices face is incomplete client files. Clients often do not know what they need. They may not understand the difference between a W-2 and a 1099. They may forget bank interest forms. They may not realize business receipts matter. They may not know what documents are needed for dependents, education credits, retirement income, unemployment income, or self-employment income. AI can help your office create simple, client-friendly checklists. Not complicated tax advice. Just practical preparation instructions. For example, documents to bring if you are self-employed. Documents to bring if you have rental income. Documents to bring if you received unemployment. Documents to bring if you had a new baby. Documents to bring if you bought a home. Documents to bring if you started a small business. This improves client readiness. It saves staff time. It reduces back and forth communication. It makes the office look organized. And it helps clients feel more confident before they arrive. That is how AI supports client service without creating unnecessary risk. Here is another powerful workflow: missed call response. During tax season, missed calls can cost real money. A potential client calls. Nobody answers. They call the next tax office. You lose the lead. This happens every day. AI can help create an automated missed call text or email response. For example, "Thanks for contacting our tax office. We are currently helping other clients. Please reply with your name, tax filing need, preferred appointment time, and whether you are a new or returning client. A team member will follow up shortly. That simple message can save leads. It can reduce voicemail overload. It can create a better client experience. It can help the office respond faster. And again, this does not require AI to give tax advice. It simply helps the office communicate. For small tax offices, speed matters. The office that responds faster often wins the client. AI can help your office look responsive even during peak season. AI can also help tax offices create client education content. This is a huge opportunity. Most tax offices only communicate with clients during tax season. But the offices that build trust year-round have a major advantage. AI can help create simple content such as, what documents should you keep for tax season? Why small business owners should separate business and personal expenses? What gig workers should know before filing taxes? Why tax planning should not wait until April? What to do if you receive an IRS notice? Why bookkeeping matters before tax season? This type of content helps your office stay visible. It educates clients. It builds authority. It gives people a reason to follow your page. It creates trust before someone ever books an appointment. But here is the key: AI should draft the content. A tax professional should review it before publishing. That review step is what protects the office. AI helps speed up content creation. The human expert protects accuracy. That is the winning combination. If a tax preparation office uses AI, there must be one non-negotiable rule: human review is required. Any AI-generated content involving tax guidance should be reviewed. Any AI-generated response to a client question should be reviewed. Any message about deductions, credits, filing status, IRS notices, dependents, business income, or tax planning should be reviewed. This does not slow the office down. It protects the office. Think of AI like a fast assistant. It can draft quickly. It can summarize quickly. It can organize quickly. But it still needs supervision. No responsible tax office should allow AI to become the final voice of the business. The client hired the tax professional, not the software. AI should support professional judgment, not replace it. That is how you keep trust at the center of the business. Before a tax office uses AI, it needs a simple AI policy. This does not have to be complicated, but it does need to be clear. Your AI policy should answer 5 questions. Number 1. What AI tools are approved for business use? Number 2. What information is never allowed to be entered into AI tools? Number 3. What tasks can staff use AI for? Number 4. What tasks require manager or tax professional approval? Number 5. What content must be reviewed before being sent to a client? This policy protects the business. It protects employees. It protects clients. It reduces confusion. It creates accountability. Without a policy, every employee may make their own decision. That is risky. One person may use AI safely. Another person may paste sensitive client information into a tool without understanding the consequences. A policy gives the office structure. And structure is what turns AI from a risk into a business advantage. Now let's talk about what tax offices should be careful with. A tax office should not casually enter sensitive client data into public AI tools. That includes social security numbers, full names with financial details, bank account numbers, complete tax documents, client addresses tied to tax data, employer identification numbers, payroll records, IRS notices with personal information, driver's license information, dependent information, private business financials. If your office cannot clearly explain where the data goes, how it is stored, who can access it, and whether it is protected, do not use that tool for sensitive data. This is where many businesses make mistakes. They focus on speed. But tax offices must focus on trust first. Speed without privacy is not progress. Automation without security is not smart. AI without rules is not a strategy. Large tax firms already use automation. They have online portals. They have automated reminders. They have digital intake systems. They have call centers. They have marketing automation. They have workflow dashboards. Small tax offices often have fewer resources. Maybe the owner is also the lead preparer. Maybe the staff is seasonal. Maybe one person is handling phones, scheduling, documents, and follow-up. That is a lot. AI can help smaller offices compete. Not by pretending to be a big corporation, but by becoming more organized, more responsive, and more efficient. A small tax office can use AI to follow up faster. Send better reminders. Create more helpful content. Reduce repetitive questions. Capture more leads. Improve the client experience. Help staff stay focused. That matters because clients judge your office by the experience. Did you respond quickly? Did you explain the process clearly? Did you tell them what documents to bring? Did you follow up? Did you make them feel protected? AI can support all of that. Let's be honest. Tax season can be chaotic. Clients wait until the last minute. Phones ring non-stop. Documents come in incomplete. Staff gets overloaded. Appointments move. Emails pile up. People ask the same questions repeatedly. Owners work long hours. That seasonal pressure creates mistakes. Not because tax professionals do not care, but because the workflow gets overloaded. AI can help reduce repetitive office chaos. It can answer general process questions. It can draft reminders. It can organize client intake. It can create appointment follow-up messages. It can help prepare educational content. It can support internal checklists. It can help the office stay consistent. This is the real value of AI for tax preparation offices. It is not about replacing expertise. It is about reducing the noise around the expert. Here is the message every tax office owner needs to understand. AI does not replace the tax professional. AI replaces repetitive chaos. It replaces missed follow-ups. It replaces blank page writing. It replaces disorganized reminders. It replaces repeated manual messages. It replaces some of the back and forth that slows the office down. But it does not replace judgment. It does not replace experience. It does not replace client relationships. It does not replace compliance knowledge. It does not replace the responsibility of the tax preparer. Clients still need a trusted professional. They still need someone who understands their situation. They still need someone who can ask the right questions. They still need someone who can review the details. AI is a tool. The tax professional is the authority. That distinction is everything. So how should a tax office begin? Here is a simple implementation plan. Step 1. Identify your most repetitive office tasks. Do you spend too much time answering the same questions? Do clients forget documents? Do leads go cold? Do appointment reminders take too much time? Do you need better content for social media or email? Step 2. Separate tasks by risk level. Low-risk tasks include reminders, checklists, general education, and marketing drafts. Medium-risk tasks include intake summaries and draft client responses that require review. High-risk tasks include tax advice, return decisions, IRS responses, and anything involving sensitive personal financial data. Step 3. Start only with low-risk tasks. Do not try to automate everything. Start with one workflow. Maybe appointment reminders. Maybe document checklist emails. Maybe missed call follow-up. Maybe review requests. Step 4. Create review rules. Decide who approves AI-generated content. Decide what can be sent automatically. Decide what must always be checked by a tax professional. Step 5. Train the team. Everyone should know what AI is allowed to do and what it is not allowed to do. That is how you use AI responsibly. Let's talk business. A tax office does not only need accuracy. It also needs efficiency. Every missed call may be a missed client. Every forgotten document delays revenue. Every repeated question costs staff time. Every manual follow-up slows the office down. Every frustrated client may not return next year. AI can help protect time and revenue. If AI helps your office respond faster, that can increase appointments. If AI helps clients arrive prepared, that can reduce delays. If AI helps staff avoid repetitive writing, that can improve productivity. If AI helps create year-round content, that can bring in new clients. If AI helps improve the client experience, that can increase retention. This is why AI matters for small tax offices. It is not about chasing a trend. It is about building a better operating system for the business. In tax preparation, trust is the brand. Your logo matters. Your website matters. Your marketing matters. But trust matters more. Clients want to know their information is safe. They want to know their return is handled carefully. They want to know you are paying attention. They want to know they are not just another file. AI should improve trust, not damage it. That means using AI to communicate better. Using AI to stay organized. Using AI to reduce missed details. Using AI to help clients feel prepared. Using AI to support the human team. But never using AI in a way that makes clients feel exposed, confused, or misled. The tax offices that win with AI will not be the ones that use the most tools. They will be the ones that use AI with the most discipline. Let's break down a few myths. Myth number 1, AI is always unsafe. That is not true. AI can be unsafe when used incorrectly. But controlled, reviewed, and limited AI workflows can be very useful. Myth number 2, AI can replace tax preparers. No. AI can assist with administrative tasks, content, reminders, and drafts. But tax professionals still provide judgment, accuracy, accountability, and trust. Myth number 3, only large firms can use AI safely. Not true. Small offices can use AI safely if they start with low-risk workflows, approved tools, and clear rules. Myth number 4, we do not need a policy because our staff knows better. That is dangerous. People make mistakes under pressure. A policy protects everyone. Myth number 5, AI is only useful for tax advice. Wrong. For tax offices, some of the best AI use cases are operational, not technical. Scheduling. Follow-up. Client communication. Marketing. Checklists. Workflow support. That is where AI can create fast wins without creating unnecessary risk. So, is AI too risky for a small tax preparation office? Here is the real answer. AI is too risky when it is unmanaged. AI is too risky when it is unsecured. AI is too risky when staff use random tools without approval. AI is too risky when private client data is copied into public platforms. AI is too risky when AI-generated tax guidance is sent without review. AI is too risky when there is no policy, no process, and no human accountability. But AI is not too risky when it is used responsibly. AI can help a tax office save time. AI can reduce repetitive administrative work. AI can improve client follow-up. AI can help clients prepare better. AI can help the office communicate faster. AI can help small tax firms compete with larger companies. AI can reduce seasonal chaos. AI can support the tax professional. The future of tax preparation is not AI versus humans. The future is responsible AI helping trusted tax professionals serve clients better. The tax offices that win will not be the ones that blindly chase every tool. They will be the offices that protect client trust, use technology wisely, and build smarter systems around professional judgment. So before you say AI is too risky, ask a better question. Where can AI safely remove repetitive office chaos without putting client trust at risk? That is where the opportunity begins. If you own a tax preparation office, accounting firm, bookkeeping service, or local professional service business, now is the time to think strategically about AI. Do not use AI blindly. Do not avoid it completely. Use it responsibly. Start with low-risk workflows. Protect client data. Keep humans in control. Build systems that help your office work faster, safer, and smarter. For more business technology strategies, AI automation ideas, and digital transformation tips for small business owners, subscribe to the Grow with Technology YouTube channel. Follow us on Instagram and Facebook at @GrowWithTechnology704. Visit www.growwithtechnology.com and listen to the Grow with Technology podcast on Spotify. Because the future belongs to small businesses that know how to use technology with purpose, protection, and profit.